Bring in Bryce Doty, Sid Investment Associate Senior Portfolio Manager, joining us today from beautiful Minneapolis. Bryce, let's start off with that question from Caroline here. Where do you look in this environment?
Oh yeah, it's really tricky because if the Fed is on hold, which we think they will be until Powell gets reappointed in February, inflation's going to continue to mount. Even with the Delta variant out there, you know, it's a concern, but it's probably not going to shut us down. It can't do to us what the original virus did. So you're still going to have massive supply constraints. We still see TIPS as an inflationary hedge. We think that's great. There's so much market manipulation by both the Fed and and Congress with all the stimulus going on. You might want to even consider front-running some of the things in the infrastructure bill. I know it seems like it's boring, but there's a component in the bill that says that they're going to provide money to protect the water supply as well as our energy grid from cybersecurity attacks. The play there is the ETF hack. You know, it's crazy, but you can actually benefit from a bunch of money that's going to pour into these, you know, these juicy government contracts to some of these companies for cybersecurity.
I think indeed President Biden is going to be giving a key speech about cybersecurity next week and meeting with members from that particular industry group, Bryce. So interesting you bring that up. It was notable just a little bit earlier, you were saying when Fed Chair Powell gets reinstated or re-elected in February. Are you confident on that he will?
I am. If he doesn't mess it up, okay, as long as he doesn't taper beforehand and cause too much volatility in the stock and bond markets, I think he's a shoo-in. So that's why, despite what all the fears are about his Jackson Hole speech next week, I don't think he's going to jeopardize that. I think he really does want to get reappointed. That said, he's been like, you know, the Wizard of Oz, don't look behind this curtain, because he's been tapering on all other programs all along. So they started discontinuing special stimulative programs at the beginning of this year. And most recently, they've been selling their corporate position. Not only have they tapered and stopped buying corporate bonds, they've almost completely blown out of all their positions. So he's you know, being quite a political animal in my perspective, because he's saying, no, we're not tapering, not tapering, not tapering. And over here, he's blown out billions of dollars worth of corporate bonds. So I understand the market's focus on okay, what's next? What's next is, you know, pulling back, not buying the treasuries and mortgages. However, the way he's talking, the way he's doing the smoke and mirrors and what he's doing versus not doing, I think that means he's going to be very careful to not disrupt anything with tapering too early until he's been reappointed in February.
Bryce, is the taper tantrum then behind us? Did we see the worst of it? And then, of course, now bond yields could go in a well-behaved, orderly climb higher? Or are you looking at perhaps maybe some disruption?
I think the disruption is yet to come. I think that we've had a mini tantrum. But next year, once they really start tapering in earnest, pulling back that money that's pouring into, particularly the mortgage market, that'll probably be what they taper first, is that they'll probably reduce the $40 billion a month they're doing in mortgages. So that's going to bring, you know, yields higher, mortgage rates higher. The housing market's on fire, going up 20% a year. That's going to come to a halt. So I think that that's the tantrum. It's both mortgage rates going up, and all of a sudden people thinking that, well, you know, maybe real estate doesn't go up at 20% when the population growth is only 2%. So I think that the first or second quarter next year is where I'm really concerned. I'm not nearly as concerned between now and year end. Now and year end, we're just riding the inflation wave, you know, buying a B drive, mentioned a germ to take advantage of the Delta variant, and then just tips. Tips are great. They're 5 to 10% accretion a month.
Yeah. Well, yeah, we're going to look back on 2021, and this will certainly be the year of tips for those who were smart enough to get into it. I am just curious, though, too, Bryce, about the expectations for tapering here. We had Vincent Reinhart, the economist, on Bloomberg television a little earlier today, and he kind of talked about this idea that the Delta variant and the resurgence of COVID might have sort of changed the dynamics a little bit from maybe what we were anticipating maybe a couple of months ago. And the idea that now Jay Powell and the rest of the folks there kind of have something to fall back on, because they could sort of use that as an excuse either to move forward or to stand put, depending on where they think or where they want to say the COVID crisis is headed.
Right, for sure. I agree that this Delta variant has provided them some cover. So let's say in the next 2 months, you get 1 million new jobs each of the next 2 months. Normally, they'd feel this incredible pressure to not just, taper, but people would start to talk about, hey, when are you going to raise rates? But the Delta variant allows them to push that off, to kind of delay that and say, you know what, we've had some great employment numbers, but let's just wait and see, because we don't know if parts of the economy are going to shut down again. So I think they're going to use that to kind of delay until the first quarter of next year before they actually start cutting back on their purchases.
From your perspective, give us a sense of what your clients are saying right now, Bryce. How do people feel about putting money to work in this market at this time where we started this conversation on saying, where do you put money now? You're talking about hack and cybersecurity, but do people still want to be putting money in at these levels, whether you're looking in the bond market or indeed the stock market?
Yeah, they're worried. The stocks have had such a run. Bond yields are so low. The question is, where do you go? We like just barbelling the risk spectrum. So taking some of your money off the table, take some profits and put it into a conservative investment. We have one of our most conservative investments is the ETF Vault, V-A-L-T. It has very plain vanilla short bonds in it. There's not a lot of mystery to it. You don't want to have to spend a lot of time worrying about where you put in your cash. And we don't like the S&P 500. It's not the index it used to be. It's kind of a tech heavy. And so I think there's other plays to do. There's sector plays. I think the housing area is just about done. We like some selective closed-end bond funds as an income alternative, and then I mentioned some of the other sector ETFs like hack. Even do a cyclical kind of thing, or not a secular play. Do MJ. More and more states are proving that. Just anything to diversify away from the S&P 500 at this point.
Cooling on cannabis. Good timing after New Jersey's news yesterday. Bryce Doty, great to have you on. Always brings such energy. Happy Friday. Sid, Investment Associate Senior Portfolio Manager.